Hello guys, what's good guys? How you guys doing? I hope you guys are having a lovely day. I'm always back. I'm going to be giving you guys back-to-back content on YouTube, guys. Back-to-back content on YouTube, guys. So I've currently been looking throughout of YouTube, and I've seen that people are struggling with, I check comments, people are struggling with how to identify the trend. Yes, people are struggling with how to identify the trend. So in the forex market, how many types of trend do we have? Number one, we have the uptrend, whereby price is moving upwards. Number two, we have the downtrend. Number three, we have the sideways moving market, right? We have the uptrend, we have the uptrend, we have the downtrend, which whereby price is coming down, and we have the sideways moving market, right now. So now, guys, I'm going to be starting from the uptrend. So now, in price action, we have the bullish, the bearish, and the ranging market, right? Now, the bullish trend or the upward moving market, this is when price is moving up. This is when price is moving upwards, whereby creating two components called higher highs and higher lows, right? Creating two components called higher highs and higher lows, right? Creating two components called higher highs and higher lows, guys. So this is the uptrend. Yeah, there you have it. This is the uptrend. There you have it. And in an uptrend, we have two components. We have the higher highs, and then we have the higher lows, right? We have the higher highs, and then we have the higher lows, right? We have the higher lows, right? Yes, those are the two components involved in an uptrend. Those are the two components involved in an uptrend. Yep. So those are the two components involved in an uptrend. We have the higher highs and we have the higher lows. Right now, so you can clearly see that this is a typical uptrend whereby price is moving upwards, right? Whereby price is moving upwards, right? There you have it. So now, these components, the higher highs and the higher lows, right? How can we identify them on the chart, right? The higher highs can also be called impulsive markets, the impulsive market, and the higher lows can be called the retracement market, right? So now, the peak of the trend, the new highs at which it creates, is called the higher highs. Like now, this is the higher high. We clone this again. This is the higher high. We clone this again. This is the higher high. Yep. Let me give you the last one. And this is the higher high. We go again. This is the higher high. I'm taking my time to identify this for you guys. Yep. And this is the higher high. Right. Now, where can we identify the higher lows of the trend? Right? Where can we identify the higher lows of the trend? Now, at this point, we have the LH, which means higher lows, right? So these are the higher lows of the trend. Can really bring this down. These are the higher lows of an uptrend, an upward moving trend, an uptrend. Anyhow you can call it, as far as is an uptrend, right? Or as far as what you are saying is an uptrend. Yes, guys, I'll be showing you guys something really significant today. I'll be showing you guys something really significant today. There you have it, and there you have it. Yep, I really want you guys to pay attention because I'm giving you guys a secret on how to be able to know break of structures and where to be able to execute a trade from. Right. So this is an upward moving trend, and then we have the higher highs. These are the higher highs of the trend, and these are the higher lows of an uptrend. Remember, I say an uptrend is any market that is moving upwards. But guys, this is picture perfect. On the charts, it might look very weird, but I'll be giving you guys 2 or 3 examples of each trend by the end of this video. Right. Let's have it. So now you can see clearly that we have been able to identify the higher highs and the higher lows. Now the next question, what if you wake up at any time at which price you see price creating a higher low, a higher high, and then you want to jump in for a buy? Where do you buy? Right? For beginners, you have heard something like sell high and buy low. Let me explain that to you guys right now. Now, selling high is selling at this peak. Yeah, selling at this peak. Let me use this arrow. Selling high is selling at this peak. Yep, you sell at this peak. Now, buying low is buying at this peak. Buying low is buying at this peak. So now for an uptrend, where do you buy and where do you sell? Right? And note, for an uptrend, you don't sell except you are good at what you do, you are advanced or you are a professional, you are good at what you do, then you can pinch a little trade from the retracement. But if you are not that good, then when you see an uptrend, make sure the only thing you are doing there is buy. Because if you go otherwise, you might end up either losing your account or losing a huge amount of money in your account, or maybe accumulating a huge loss. Right. So now for an uptrend, you buy at the higher low. Yes, guys, for an uptrend, you buy at the higher low. You buy at the higher low. So that is the number 2 secret I'm telling you guys about a trend. Now, the number 3 secret about the trend, how do you know when a trend is coming to an end? Maybe how do you know an exhaustion is coming in a trend? Now you can clearly see that price created a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. But you can clearly see for a higher high to be called a higher high, it must be able to break significantly above the previous higher high. This is the previous higher high. You can see that this other higher high broke significantly above this other high. Right. But take a look at this other one right here. You can see that price could not break above this other higher high. That's the previous higher high. That tells you that the buyers can no longer push the market further. That tells you that the buyers can no longer push the market further. Right. Rather, when you see something like this, you know that the buyers can no longer push the market further. Rather, price will come back and break below the higher low. Once price comes back and break below the higher low, it is called a break of structure, meaning that price has changed the trend, the overall trend, from an uptrend to a downtrend. Right. From an uptrend to a downtrend. Price has changed the overall direction from an uptrend to a downtrend. So now let's go with this. Okay, let's look at our downtrend, and then we have this, and then we have this, and then we have this. So now guys, now this is a typical downtrend. Please guys, don't mind my drawing. This is a typical downtrend. Now price broke. When you see a double top, we call this double top, we call this area double top, price creating a double top. When you see a double top, you don't just sell at the peak of that double top if you don't know what you're doing. You wait for price to break the higher low of that uptrend. That is to confirm that price has changed its bias from an uptrend to a downtrend. You wait for price to break below the higher low, and then you wait for a retest of that higher low. Right. So now we have the second trade. The second trend that we're going to is a downtrend, right, or a downtrend or a bearish market. So we have a downtrend, or you can call it a bearish market, right. A downtrend or a bearish market. There you have it. We have the next one, a downtrend or a bearish market. And now the downtrend consists of two components. We have the lower low. We have the lower low. Consists of two components. We have the lower low, and then we have the lower high. Right, guys. We have the lower high. Yes, there you have it, guys. I hope you guys are following me. So we have the second trend, which is called a downtrend or a bearish moving market, and then it has two components, majorly two components. We have the lower low and the lower highs, right. So now in this downtrend, a downtrend is just when price is moving downwards, right? Let me currently delete this and delete this. It's just basically price moving downwards, right. So now the next thing we go is how and where can we identify the lower lows and the lower highs. How we can identify the lower lows and the lower highs. The LL stands for the lower low, while the LH stands for the lower highs, right, guys. So now we have this. We go again. We have this lower low. We go again. Sorry guys. Then we go again. We clone this. Then we have this other lower low here. Then the next one is how we identify the lower highs. So we have this lower high. Sorry guys. We have this lower high. Yep. There you have it. And we identify the next lower high. Yep. And then we identify the next lower high. Yep. Yes, there you have it. So in a downtrend, we have the lower low and the lower highs. Now, the lower low is the impulsive move of that downtrend, while the lower highs is the retracement move of that downtrend. The impulsive move, the retracement move. The impulsive move, the retracement move. Now we can clearly see and identify the lower lows and the lower highs. Now, where do we take a trade in a downtrend? Remember, we buy high and we sell low. Sorry, we buy low and sell high. Excuse me, guys. Forgive me for that. We buy low and sell high, right. So now you can clearly see that in a downtrend, we take our entries at the lower lows of that trend. We wait for price to create a lower high. We take our entries at the lower high of that trend. This lower high. We take our entries on the lower high of that trend, right. Now the third thing to note is, how do we know that a downtrend is coming to an exhaustion? Right. Now remember, I told you guys in the previous trend we were trying to identify that before a higher high can be called a higher high, it must break significantly above the previous higher high. Now before a lower low can be called a lower low, like this lower low, they must be able to break significantly below this lower low. They must be able to break significantly below this lower low. They must be able to break significantly below this lower low. Right. Right. Now, let's come to the juicy part, how we know that price is getting to an exhaustion in the downtrend, meaning that the sellers can no longer push the price any lower. Right. Now you can see that here, price created a lower low, price created a lower low, price created a lower low on this one, price created a lower low on this one. Now you can clearly see that on this particular side of price could no longer break below this previous low. Yo guys, so now we have been able to identify an uptrend, we have been able to identify a downtrend. Now we go to the third trend, which is a sideways trend. Now a sideways trend is just basically price moving in between two zones. It's just basically price moving in between two zones. It's just basically price moving up, down, up, down, up, down, up, down, in between two zones before a break, a retest, and a new trend is formed. Either ways, this can happen either ways. Either price can break below, or price can decide to break above by giving us something like this, by going back, breaking above, making a retest, and then boom. So in a ranging market, right, price is just basically moving in between two zones. Price is basically moving in between two zones, right. And now price will either choose by itself to either break lower or higher, right. And for a newbie, for a beginner trader like you, or like anybody else, a beginner trader, an advanced trader, or a professional trader, I would advise that if you are not yet sure or strong in trading, please, when you see a ranging market, stay away. Let me clearly type it down. Stay away. That's basically the word. Stay away. And now this is a ranging market. So guys, when you see a ranging market, or is either you call it a ranging market, or a sideways moving market, or a consolidation, but I prefer keeping it simple by calling it a ranging market, right. So now it's basically price moving sideways. So the best way for a beginner to be able to trade a ranging market is to patiently wait for price to either break above and create a retest, for price to either break above and then create a retest, then you enter. Remember, you buy low and you sell high. So you enter a buy trade from here and then you capitalize on this. Or you wait for price to either break lower, create a retest, and then you sell. Remember, you sell high, right. So that is it for a ranging market. So now let's go into real life examples. We identify the trend on real life examples, real chart. So now this is GBP. This is GBP USD. Sorry guys, Great British Pounds US dollar. So that's how it is. Now we can clearly see a trend. I can clearly identify a lot of trend inside of here. But first off, we can clearly see this downtrend. Yep, price moving down at this area, this downtrend here. You can clearly see this downtrend, right. So now this is basically the monthly time frame, but you can scale down to the lower time frames to identify these three types of trend, right. So now you can see currently on the monthly time frame, price created a lower low, a lower high, a lower low, a lower high, a lower low, and price is still creating a lower high because now price hasn't broken above the previous lower high. right, to tell you that the structure has changed. But guys, this is a monthly time frame. Please don't trade on a monthly time frame. You're going to be going crazy with stop losses. Right. So now that is it for a downtrend. We have been able to identify a downtrend. So now I will scale down to the daily time frame because I have seen. Okay, let me scale down to the weekly time frame. I've been able to cite. Okay, like guys now, you can see this now. A perfect downtrend. You can see this move, this downtrend that occurred here. Yep, this downtrend that occurred here. This is a downtrend. I told you what I drew was picture perfect, but price can't give you picture perfect. We have this lower high, we have this lower low, lower high, lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower high, a lower low, a lower high, a lower low, but price could not break to create a new lower low, but rather price broke above the previous lower high to give you guys what, a higher high, and then create a new structure, the higher low, create a new structure, the higher high, create a new structure, the higher low, create another one, higher high, higher low, higher high. So there you have it. I've identified two trends right now. I've identified both the downtrend and a good uptrend for you guys. Constant practice, guys. Constant practice will give you a good result. Constant practice will give you a good result, because you can't just for one day. You need to be practicing. Then I bet you have a good result. Now we look for a sideways moving market. Let's identify a sideways moving market. Yes, I can see one. This is a sideways moving market. Obviously, we can see that price is moving through this area, and then price is moving in between that area and in between this area. And yep, this was a fake out. Price is moving up and down, up, down, and the next level is where up. I told you guys, it's as simple as that. It's as simple as it could be, guys. So you know that GBP USD is heading for this level. Obviously GBP USD is heading for this level. Exactly, guys. So I've been able to identify a downtrend, an uptrend, and a sideways moving market. Okay, guys, so let's go to another pair and try to identify this trend again. Let's go to GBP JPY. We identify the trends. We look for trends, different trends, guys. Now we can clearly see this, guy. We can clearly see this uptrend. Let me go to the weekly time frame to make it look clearer. Yes, guys, we go to the weekly time frame to make it look clearer. Yep. We go to the weekly time frame to make it look clearer. Okay. Yep. Yes, there you have it. So now you can see this is on the monthly time frame. You can see that price is basically moving to the upside. Right. And I told you guys that price in an uptrend consists of two components. We have the higher highs and the higher low. Now this was the previous neckline of this downtrend. The neckline of this downtrend. Price from here broke above. Price broke above here to create what? A higher high, higher low, a higher high, a higher low, a higher high, and price is currently creating a higher low to go back forward, a higher high. Yeah, price is currently creating a higher low to go back forward, a higher high. So that is how to identify an uptrend, a downtrend, and a sideways moving market. There is nothing to be complex about. Keep everything simple, and I bet you get it. So it's your boy Good Life, and make sure that, guys, practice make perfect. You're not learning and then keeping your laptop one side, because Forex is like football. When you stop playing football, you go back to playing football again, you will now realize that you are not fit. But when you keep playing, you will always be fit. So that's how Forex is. Forex is when you leave the chart and go and sleep for a very long time without coming back to practice. When you come back, it will be looking strange. But constant practice as a beginner, as an advanced trader, as a professional, then you will know that Forex could be very simple to navigate or to forecast. So it's your boy Good Life. Do well to subscribe to my channel. Turn on the notification bell icon so that when I post videos like this, it will interest you.